Washington and Beijing have spent 5 years threatening to decouple their economies. The problem? Neither side can find the scissors. China controls 90% of the rare earth magnets that go into American F-35 fighter jets and Virginia-class submarines. When Beijing imposed export controls in October 2025, the Pentagon discovered that 30% of its weapons programs faced potential delays. The U.S. can't build its military without Chinese materials, at least not until the mid-2030s. Meanwhile, Apple makes $64 billion a year in China. Qualcomm gets 64% of its revenue there. Tesla, 21%. When companies tried relocating factories to Mexico and Vietnam, they discovered Chinese firms had already bought the new plants, effectively moving the dependency, not ending it. Bilateral trade hit $415 billion in 2025 despite the rhetoric, with a mysterious $112 billion gap in customs data suggesting someone is still desperate to keep goods flowing under the tariff radar. Decoupling isn't a policy choice anymore. It's an engineering problem nobody knows how to solve. The European Commission is signaling its intent to launch a trade war against China, aiming to counter what Brussels calls China Shock 2.0, a wave of subsidized Chinese exports flooding European markets. The Commission's approach frames China as an adversary rather than a potential trade partner. The article argues Europe could benefit more from cooperation than confrontation in its economic relationship with Beijing. A trade war would disrupt European supply chains and raise costs for consumers while potentially isolating Europe from one of the world's largest markets. This reflects the broader Western dilemma of balancing economic interdependence with geopolitical competition in the post-globalization era. Chinese self-driving car companies are leveraging the country's established electric vehicle supply chain to accelerate their robotaxi development and international growth. These firms have benefited from China's head start in EV manufacturing infrastructure, battery technology, and component production. The BBC reports these companies are now positioning themselves to compete globally in the autonomous vehicle market. China could replicate its dominance in electric vehicles within the autonomous driving sector, potentially reshaping urban transportation worldwide. This expansion signals how China's industrial policy strategy of building integrated supply chains creates compounding advantages across related technology sectors. A YouTube video discusses the latest developments regarding Cochin Shipyard shares, including price targets and the company's Q4 2026 results outlook. The content appears to focus on investment analysis and stock performance for this Indian shipbuilding company. Specific financial figures or target prices are not provided in the available event description. Shipbuilding industry performance reflects broader trends in global trade, naval defense spending, and maritime infrastructure investment. Indian shipyard stocks also signal investor confidence in India's manufacturing ambitions and its role in global supply chain diversification away from China.